Ladies and gentlemen of the crypto space, we're live on a Monday at 11:31 a.m., May 3rd, the start of the week. This weekend was hot, and we're coming into a week where things look like they are floating. And what I say that, I mean it's about gravity. Either gravity's pulling things down and the bears are in control, or things are floating anti-gravity and bulls are in control. And that's what it looks like right now, especially as the Bitcoin dominance falls and Ethereum breaches 3,000, and pretty much all coins are appreciating across the board. And these are good signs because I know the vast majority of people are not allocating the majority of their capital to just Bitcoin. Most new entrants to the space and smaller players don't see the value in Bitcoin, which is something that comes with experience. The value in Bitcoin is undeniable. It's the macro asset. It's like owning bonds and treasuries if you're in the legacy financial space, relatively speaking, from the perspective of being in crypto. It's kind of the stuff that most people don't consider. When you're a new entrant to the crypto space, you want the thing that's going to go from 10 cents to $50, and that's definitely a destructive mentality. And when markets turn south, that mentality is what accounts for a complete destruction of a portfolio's value. Um, and it has happened time again throughout history. And it's not just 2017, 2018. It'll happen again. And clearly, I think this time is different, but that's besides the point. You know, plenty of arguments that I'll present why it's not just an opinion this time is different. It's overwhelmingly different, and value is changing, and how it flows is changing. But extreme value will be lost, guaranteed. And I tell everyone that there's sharks and wolves in these waters, and they'll take your money, and they won't think twice about it. It's not personal; it's just business. And assets will ramp up in price. Early token holders will liquidate and capitalize on the new entrants, facilitating a cost basis reset process. They'll sell. The small holders won't understand how to manage the depreciative cycle. They'll sell, which will cause a nice retrace, a nice dip. And then after the smaller holders finish selling, the big whales will just pile back in and ride the cycle higher. Because the persons with experience and capital are able to they know the behavior of persons that lack such experience, and they prey on it. It's not necessarily a bad thing. It is a transfer of wealth from the inexperienced to the experienced, which is what Warren Buffett describes as a value transfer from the impatient to the patient. But it's more than that, and it's more than just patience, because patience is a component of experience. And that's the way markets work. And if you think about it, it's opportunistic. It's not personal. It's business. And that's what's happened time and time again in the legacy financial system. You know how many people lost their entire life savings on GameStop? You know how many people lost their entire life savings on Tesla because they traded too much, or they just they were just buying for irrational reasons? Now, clearly, it's a wonderful asset, or a wonderful company. The asset is not necessarily representative of the company, 1,000 to 1 P/E, but they're buying it for the wrong reasons. They're buying it because they want it to go up in value for them to make value. But the asset does nothing for them. It doesn't produce a revenue stream. So they're going to sell so this comes back to like folks buying assets in the crypto space because they're buying an asset that they love, and that's not why you're buying an asset. You could you could say or think you're as altruistic as you want to be, but you're buying an asset to capitalize. So if you want to buy an asset to hold and because you love it, that shit better produce revenue. So otherwise, at some point, you should sell it because you're in this for one reason and one reason only. You're not going to change the world yourself. You could change the world as a community, but as an individual, you're not a community unto yourself, and you're going to get preyed upon by wolves and sharks and all that fancy shit that we know exists in the dark forests. And the first step to being different is to admitting that and to start acting different. And knowing that you could be better and pursue better. RR's in the house. J Nice Mint. Anyway, before I get into the stream, let's go through the intro. Spreading too thin is not a path to success. It's actually a path to absolute portfolio devastation. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam. Let's pop it over to the main screen and see who's in the stream. As I said, RR, J Nice Man, Costco in the house. What's up, Noah? Barry. Yeah, did you? Yeah. Lewis is in the house. Always a pleasure. How many positions tempers risk but maintains optimal velocity? It's a subjective answer. It must be. What's most pertinent is that, well, what helps guide you in knowing what the appropriate balance is your comfortability, your anxiety, and gut instinct. Are you in a position where you could be versatile? Do you have cash? If you don't have cash, you can't do shit. Just saying. So there's situations where you don't have cash when you're making a concentrated bet. And in such a situation, you're waiting for a time horizon to play out. And you're going to try and capitalize on that bet. And that's exactly a situation I find myself in with two prevailing narratives that I'm executing on. I'll wait for the narratives to play out. I'll attempt to capitalize on them. And the first thing you do when you capitalize on the narrative actually playing out is you extract your initial position, which frees up the original capital, rebalances the portfolio, and that starts the process of reassessing where you are in your own personal investment cycle. If you double a position, which is what I'm hoping for, at least in the short term, for like Matic, grab 100%. I'll extract the original capital, which will replenish my cash reserves and facilitate my self-dialogue with where I could deploy that capital to. And the odds are, and here's the thing, once you have that capital put into cash, there's no rush, especially in the crypto space now. And that's why this time it's different, because that capital's sitting, outperforming debasement, emitting often asymmetrically appreciating assets, growing, earning, working. So you literally have no rush. So what I would do in that is you extract your initial capital allocation, replenish your cash position, and take your time. Sit back, take a week off. And that's the way this game is played, at least the way that I'm learning and growing and evolving to understand the way it's optimally played. And there's an art and a strategy, it's just like anything, learning karate, learning a sport, and it's a song and a dance. It's elegant once you find the strategy and the motions. Reminds me of when I was young, I did Shotokan karate when I was a child, and reminds me of what's called katas. And but the first time you do anything, you kind of shit at it, but after years of practice, it's elegant and there's beauty in it. It's a dance in many regards. Heirlooms in the house, always a pleasure. Nikolai, yes, sir. James, hope you had a good weekend. It was nice. I had a lot of family over. We hung out by the pool. It's good to have family over. What's the point? Well, I have this pool in the backyard. I tell everyone to come over. I buy a bunch of meats and stuff. I jump on the barbecue and I take care of them. And that gives me purpose. And I much appreciate that. What's the point of having stuff if people aren't going to use it? And if it, otherwise, I'd live in a one-bedroom apartment and there's going to be a lot more cash in the bank. uh, my man. Concentration with high conviction. That's a good statement, but it's not just conviction. You need a narrative and a story to hang your hat on. Concentration without a story isn't a bet, it's a gamble. So, it's not just like, for instance, folks are applying value to these new blockchains, or networks, or speculative monetary networks like Solana and Phantom. And I say it's premature because they don't have the properties of a monetary network yet, or at least a monetary network that doesn't have, that is lacking critical mass. Critical mass what? Liquidity, money markets. debt markets. And that's exactly what we're looking at on the screen right here. I don't see anything with critical mass other than Polygon, which has been eating into BSC. And it's literally visually observable as well as mathematically the case. I mean, it's $3.88 billion. I remember seeing, it was a Thursday before last Thursday when Aave launched or whatever. I believe that was the time frame. It doesn't matter. I remember there was 100 million bucks or even less. At one point, I put my capital onto Curve on Polygon, and I owned 26% of the entire LP position. I was one of the first large capital providers to Curve on Polygon. And as of now, I think I own like 0.4% of the entire Curve pool. And it's dropping because it's getting diluted. Capital is flowing in. And in a matter of less than a month, fraction of a month, double digit percent, Polygon now has, was that 20, was it 30%? A little less than 30%, 28%, 26% of the total amount of liquidity that has been allocated towards Binance Smart Chain. This is the largest, what you're witnessing is the largest redistribution of capital in the DeFi space in the shortest period of time. And no one's talking about it. This is massive. It's taken BSC a long time to get to $11.02 billion. And it's taken less than 2 weeks for Polygon to get to a significant double-digit percent fraction of that value. This hasn't happened before. This is massive. And I'm hanging my hat on this narrative. You know, folks are talking about Phantom and XDAI. Sure, these are big networks, and Avalanche and Optimism, which is what Synthetics is targeting, and Diversify. It's been around a long time, and DYDX is huge, and these are very powerful platforms. ZK Sync, which is Loopring. I wonder where Arbitum and I wish Solana was on here, or maybe it is, and it's doesn't have much. Mutable X, that's good to see. It's a heck of an L2 network, and I have a lot of Gods Unchained assets, which have literally gone up like 4 or 5 times in value because they pretty much pegged to Ethereum's appreciation. But look at these networks. They're microscopic. They don't have critical mass liquidity. They're not increasing their liquidity asymmetrically. But Polygon is for a reason, and that reason is the core of my investment narrative. It's monetary velocity. Critical mass liquidity will encourage the FOMO of developers to tap that liquidity because everyone's opportunistic. And if a platform has liquidity and functionality that draws in a user base, they're going to be able to capitalize. And that's a good thing. Because as people are as the developers are attempting to capitalize on liquidity, it's going to draw in participants that are going to move around the liquidity. And moving around money is velocity. They're going to get excited. They're going to take on debt positions on the money market, Aave. They're going to exchange different denominations of financial primitives using Curve. They're going to exchange assets using QuickSwap, and this is all monetary velocity. And what happens is monetary velocity begets monetary velocity, and it's a self-fulfilling prophecy. And that's exactly why we're at $3.88 billion in less than 2 weeks. Opportunity draws in capital. It affects the emotions of the market participants being people, obviously. And once you know how people respond, you're able to see the connections and the sequence of events that unfolds, cause and effect, causality. And is it not obvious that in 2 weeks' time, Polygon's probably going to be 6, 7, 8, 9, 10? I mean, literally, it just ramped up to 4 billion in less than 2 weeks. That's crazy. It's not that we want to extrapolate. You know, Lewis mentioned a little bit ago on Twitter. You know, can we extrapolate where the lock supply or the total liquidity on the platform is going to be. No, we can. It could decelerate, or shit, it could just go absolutely exponential. Could have $20 billion in 2 weeks. And then the story really changes because if something goes exponential, that's going to draw the attention of everyone in an opportunistic fashion. And then once it goes exponential and people are piling in capital, then that's Metcalfe's law. Piles in more capital and more capital and more capital. And before you know it, it's not just 20 billion, it's 50 billion. And all of a sudden, you're sitting on the sidelines of one of the largest value reallocation processes thus far in DeFi. The entire United States is cut off from Binance Smart Chain. Uh, everyone on the planet has access to Polygon. It's permissionless. So the interesting thing for me, well, let me hit some folks on the channel. Dean, my man, you're very welcome. I'll keep providing the content. I hope it helps. John, UniV3 incoming in 2 days. Yes, that is one of the narratives we're executing on. Kill us in the house. Wave mappers. Noah, first day in the new job. Thanks for always being a motivation for me in a reasonable voice. Hope realize how much you help all of us in one way or another. I hope I do, and I try to, and I am never satisfied. So I will keep doing what I'm doing and help more and more people because it gives me purpose and meaning. Bob, velocity eventually hits a wall if there's no markets to spend the money in, but that's exactly what I'm describing, my friend. Liquidity drives FOMO on the developers to capitalize on the flow of capital or the available liquidity. So it's just starting, and that this is exactly what happened with Binance Smart Chain. People saw a capacity to have cheaper transactions. The money markets formed, the liquidity providers, the exchange protocols formed, and liquidity filled the pools. And once the liquidity was there, then the developers FOMOed and started developing. Obviously, the vast majority of products on Binance Smart Chain are absolute garbage. So we clearly see what kind of developer community was attracted to the platform. Hopefully that's not the case with Polygon, and we actually have substance. Interestingly, and what I would hang my hat on is that Aave and Curve were two of the first platforms to really execute, or maybe it wasn't two of the first because Matic's been around for quite a long time. But I find it interesting that after Aave deployed, Curve quickly deployed. I don't know whether it's coincidence or, this development was in progress for a period of time. Um, but what I like to mention to folks is prior to Aave and Curve hitting Polygon, there was no non-speculative reason to apply capital to the Matic asset, and that's okay. So it was up 25,500% over the last 2 years, but that doesn't mean anything. People were applying value to a speculative narrative with no time horizon. And that's not something that I do. I don't. I apply value to narratives that potentially have long-term time horizons, but it's you have to understand how much speculation you're taking because speculation equates to risk. And there was no time horizon, and it was all speculative for the Matic asset. But the second Aave and Curve deployed, that changed the entire narrative. So anyone that deployed capital to Matic after Aave launched is not speculating. They're allocating capital towards a completely new narrative for the platform. It all changed, and it all just started. It's less than 2 weeks that I would say Polygon has been born, and that's the way I'm viewing what's occurring right now. Let me see if I missed anyone. Uh, Here with the crypto dietitian, Gavortex. Thank you. Let's keep it going. Mr. Weeby's in the house. Lewis, if you don't have cash, you can't do shit. You don't have cash, you can't do anything. So what you want to do is you have your high conviction, you execute on a narrative, you wait for the time horizon to play out, you extract your original principal allocation, you replenish your cash position, and now you're riding in a free position. All because you saw the position before other people saw the position. Wave mappers, hit them likes, but hit that like button. We can do better. 50 people in the stream, 14 likes. Yeah, We can do better. Angelo, APY Mon was amazing. Did someone get an egg? I like eggs. I have no idea what you're talking about, my friend. Brendan, I love using Polygon, but I hate that you have to wait 7 days. It's 3 hours. It's not 7 days. Use the POS bridge. Um, I would not use Plasma, and I've extracted Matic, Ethereum, and USDC. So there's no reason not to use the POS bridge. It was not 3 hours of a wait. It took about 30 minutes, and I extracted 32 Ethereum from Matic and from Polygon, and it worked just as expected. And sure, there's some issues here and there. I got a couple of folks in the Discord forum having issues with WBTC, but I'm sure it'll be addressed in a timely fashion. Thoughts on Pulse Chain new ETH fork with cheap fees? No interest, my friend. Rob K, is there any truth to Chico's rumor about Binance being the majority block producer for Polygon? Not the majority block producer, but they sure as hell own a shit ton of Matic. It was a Binance IEO, and that is something to consider. But at some point, what's pertinent is the technicals, and you're going to have cost basis reset. So things rip. Binance is selling. They've been selling. We have no idea their addresses are, what their addresses are, and we could speculate. But in the end, we know that everyone, whether you're Binance or whether you're individual market participants, um, it's just business, which means if there's an opportunity to capitalize and liquidate parts of a position, it's done. And if it's not being liquidated, they're waiting. So that's why technicals matter. Technicals tell you when. No one's going to destroy it. That's in no one's best interest to destroy a network by liquidating an exorbitant position. So capital is liquidated at opportune times for profit. No one wants to drive. No one wants to unnecessarily flip a bull trend into a bear trend. That's not in a large asset holder's best interest. What they want to do is liquidate as much as possible without significantly altering market behavior, because they want the asset to keep appreciating, so they could keep liquidating at higher and higher prices. To understand the markets, you have to think like the whales. That's what I would do if I had, like $1 billion worth of Matic or whatever the hell Binance has, $500 million. You liquidate over time as the asset appreciates, and then at some point you're like, shit, I don't have enough of it. Maybe they start buying because they might be a company, but in the end, the decisions and the transactions are done by human beings, and all human beings operate on the same programming language. Stay says, late for class. It's all good. We got a nice class today. Good topic. I want to look at the technicals for Matic also, which I've been trying to avoid on Twitter and keep it in the Discord forum. I don't want to. I want to avoid as best possible influencing markets, and I want to focus on education, ideology, the narratives, and the stories that I tell, such as what we're talking about in the stream. It's a person's choice where to allocate value, but what's more important is the whys and the hows, and the meaning and real substance to taking action, and not just copying folks or just doing what other folks say, which is why I loathe the vast majority of crypto influencers. They don't know what they're doing, and it's dangerous, and it's, I would argue, in many regards, immoral and self-serving, and that's unfortunate. Telling people what to buy, to the moon. It's really disgusting, actually. It's a shame. They're influencing markets, whether it's to their own benefit or not. Doesn't even matter if it's to their own benefit. They're just selling content. That's not the way to do things. There's too many people that are struggling right now. Over the last couple of weeks, folks on Twitter have contacted me that are really struggling. People, could you imagine a person that has like $1,000 in their bank account, has maybe a mortgage and debt and car loans, and they found Bitcoin, and they're maybe in their 40s, 50s, and 60s, and they have no savings, and they see Bitcoin making people's lives better, and they're going to allocate value irrationally, especially this late in the market. The market started in March 2020 when the whole system collapsed. It's been growing ever since, exponentially. So the last thing a person in that position really needs to see is to the moon, because in many regards it's a desperate position to be in with no savings, depending on one's age, and easily manipulated and susceptible to being taken advantage of. You buy someone in that position buys. They have $1,000 in their bank account and they buy $500 worth of some absolute piece of shit asset, which obviously there's a lot of in the crypto space, and someone took their money. They'll sell. Go buy some poly whale. That's I bought a little bit of 200, wrote it to 220, and bam, it tanked like the next day to like 134, 144. Absolute devastation if someone bought at 220 and it tanks to 134. They lost a huge amount of capital. So this is why cash. It's really why cash is so meaningful in the crypto space nowadays. Cash is everything. Yeah, Ethereum's on fire, Angelo. It's pretty cool. Pretty cool. You will get double your ERC20s on Pulse Chain fork. Okay, sounds good. Not so interested at the moment. I don't have any capital to deploy. No big deal. Opportunities are always available. Uh, Drizza, Doctor's the Nissan guy. Keep up the good work. Thank you very much. I hope it helps, guys. Derek, hey, no, I've been trying to withdraw USDC from Matic through the bridge, but it says I'm not connected to the network. Deposits to Matic, no problem. So there's two options, and obviously you're selecting either Ethereum or Polygon. Polygon, Ethereum. So make sure you're on the right network, and obviously make sure you're using use the Matic wallet. Just goes directly because that's the bridge. That's the primary bridge. Connect to your Matic wallet. And if there's any issues, you find their issues hub or whatever, and you know if you're sending capital. First question I would ask is why are you withdrawing capital from Matic? It's the place to keep capital right now. I mean, you're just earning cash, hand over fist on Curve. I mean, what's the yield? 30%? That's crazy. And it's 7.8% base. You know what you would have to do to get this on Curve on Ethereum right now? You'd have to have like 100 grand worth of Curve. This is the place to park cash. To top it all off, you're getting interest denominated in Matic, well, WMatic. And, I think this is just beginning. If BSC is any signpost for where this market's heading, you're talking about another 20x. And so that's why the 25,500% it's up is misleading, because folks don't see that the narrative completely changed. It's basically a different asset because there's a different reason why people will be thinking of the asset. It's a different network. A monetary system formed. Prior to Aave and Curve deploying on the network, there was no substance to the Matic asset, but now all of a sudden it has an active monetary system. A blockchain isn't a monetary system. It doesn't have properties of money. Um, well, you could talk about properties of money with regard to inflation, deflation, but really velocity. And therefore, a monetary system is a manifestation of a blockchain. So a blockchain isn't inherently a monetary system. A monetary system entails behavior and the psychological components that go hand in hand with what a monetary system is: incentives, opportunity, velocity, debt, leverage, yield, options, hedging. Oh my. Are you excited for link to Discord? Yeah, go to my profile. It's on my Twitter profile, everyone. So there's a lot of people in the Twitter Discord, in the Discord, everyone. So, I know it's a paid group, but that's important because if you're not paying for something, you're not going to take it seriously. And everyone in there right now, it's a large community at this point. They're doing things different. And, like Lewis says, or what I said, Lewis saying about what I said, if you can't do shit if you don't have cash. But what does that mean? People are buying crypto assets and they're getting out of cash. But I'm telling people to have cash in the crypto space. Yeah, it's because it's different this time. It's different. Cash works. Throw your cash in Curve and let it sit, and then figure out what you want to do. And this is where the conviction comes in. And then the time horizon. You let the time horizon execute. And then you replenish your cash position so you can find another opportunity. Do things different. And that's the way you'll succeed, because I guarantee you the vast majority of people buying shit in the crypto space are not doing things different. And they're going to get screwed if there's a liquidity event. They're going to get screwed if there's a deflationary event in the macro financial system. You know who doesn't get screwed? People who own dollars. And dollars work in crypto. That's the bottom line. You're deflation protected if you have dollars. Derek, hey, no, I've been trying to withdraw. Oh, I handled your USDC issue. Just wait, and there's some issues going on with the bridge, but I don't see any reason to take capital out of Matic at this point. Jay Young, I'm excited for the topic. It's hard to balance the amount of positions. You can't be in everything, and of course, you're limited to the amount of dry powder you have. Yeah, I got plenty of assets. I don't own what I want of. Well, the amount I want of. I don't own enough of. I don't have any Link. I don't have any EGLD, Elrond. Um, I don't have any Uniswap, but Uniswap I can't put to work, so that drives me nuts. So there's a lot of opportunity cost holding Uniswap. Link, I wouldn't mind having like 100 grand of it and staking it, not like the real Link staking. Um, was able to lock down the position in Ethereum, so it's a 32 ETH position. That's nice. There's a lot of assets that I don't have that I would want to have if I had more capital. And guess what? When I get more capital, I'll end up getting a position size that I want. Well, what matters is I don't need it into my cash position because I need that to actually execute on short time horizon opportunities. So if you're going to hold Link because it generates a revenue stream, that's great. But if it's going to eat into your, cash position, then you're going to miss out on opportunities because you don't have enough capital to deploy. And there's opportunity cost associated with holding the Link position. And that's counterproductive. Let's keep it going. What do you think is the front runner for the UniV3 integration? Unknown, but there's pretty much the four assets which we've discussed, and the time horizon is obviously really imminent. So they're very small positions. I'm holding them all risk on. It's pretty cool. XTK, Visor, Mist, and Method. I don't hold any Method because the second it came out, I staked like I don't know, like 150 grand, and then literally I got like 70,000 Method like in 1 week. So I sold off half of it. I sold off 30,000 of it, and I have like 37,000 Method sitting in 3 months' time. I'll get access to it. So I have my NFTs, and whatever happens, happens. I extracted the original capital. I experienced no ill effects on the principal that was allocated. So that actually worked out very well. And same with Visor. I have a decent sized Visor position. It's held risk on. It's about 0.4% of the portfolio. Mist is about the same, and XTK was all generated revenue because I staked a lot of XKNC, X no X SNX, but uh, X 1 inch and Xave. So I got a lot of interest on that. So that was nice. We'll see how much it is. Obviously, the price has been getting hammered a little bit lately. Boop, boop, boop. So like 28,000. That's nice. Let's see this at $10. Then I'm going to the Sizzler. 80s reference. Yes. Let's take a look back at the Matic chart. So this is obviously a sim triangle, significantly above Guppies on 4 hour. So this is a ridiculously looking chart. And if you can't tell, let's go out to the daily. The chart looks a little different as compared to its history. It looks like it came to life. Yeah, the narrative is different. 214% rip. Beautiful. People are going to think it's going to come back down. Narrative that just started executing. Hey, no, if you made 100K engaged, what would you do with it? It's a whole art of portfolio balance. And everyone needs to come to their own capacity to execute on their portfolio. I'd probably have like 50% in cash and then figure out how to deploy the other 50%. You need a 32 Ethereum is just a critical goal, and at least one Bitcoin. So if you can't own one Bitcoin, you target a half a Bitcoin. Um, so this is very hard. I have great sympathy and empathy for folks trying to figure out what to do with their capital. And really, the best I could do is tell these stories to get people thinking that it's not easy. And if anyone thinks it's easy, that's where the danger comes in, and it's a dangerous position to be in. So if you think it's easy and you made a lot of money off like some shitcoin, you're at risk of losing your money. So ask your questions, speak up, listen to the people with experience, and for the love of God, don't listen to recommendations. If someone's trying to tell you a recommendation, no. Um, I don't listen to any recommendations. Someone will mention an asset, and maybe on the back of my mind, I'll remember it and I'll take a look at it. But I sure as hell have little to no interest in anything new. No interest in new projects. I'll wait for it to go up 1,000%, let a market form, let the smart contracts be tested, let the let everything play out. I miss out on 10x gains. I don't give a crap. I'm going to wait till I have a story to tell about an asset. If I could tell a story about an asset and I could justify it and warrant a position, then I'll allocate capital. If I have no story to tell about an asset, I have no interest in deploying value. Bottom line, you're starting fresh with 10K knowledge. What do you know now? What do you do? Nick Bond, I don't have easy answers, and this is exactly why the Discord forum is imperative, because there's countless people that are in such a situation, and there's no easy answer. But all there ever is conversation. No one can give you a prescription to success, and that's the biggest fallacy. So the first thing you have to learn is don't ask for a prescription. Um, you have to it's trial and error, it's mistakes, and then you gain gut instinct, and you're able to feel the markets and understand how much risk you're taking. Understand how much risk you're taking. If you don't know how much risk you're taking, sell everything for dollars immediately and go into Aave and figure out and think about things. Start taking concentrated bets based on a strong narrative and big deal conviction. If you don't know where you are with the portfolio and where the markets are, de-risk. Go into Bitcoin. Target 32 Ethereum. I mean, you're probably going to want 32 Ethereum because you could probably retire off it in 5, 10 years. Probably want a decent curve position. You probably retire off it in the next 10 years. Most folks miss the boat on RenVM. I'm probably going to retire off it in the next 5 to 10 years. You want your recurring revenue streams. If there's parts of your portfolio that's not working, that's an extraordinary missed opportunity. And that doesn't mean deploying capital to like Ethereum WBTC pool position. So what the fuck? You're going back and forth between Ethereum and Bitcoin. You're going to have impermanent loss, and there's no dollar stability. So if there's a deflationary event, the positions are going to get absolutely hammered for their dollar value. So it's not just about a revenue stream. It needs to be a logical revenue stream. Like pair with USDC to establish dollar stability. So if there's a deflationary event, the pool is going to be skewed towards the risk-on asset as the risk-on asset is sold for dollars, and you're going to have more of a cheaply valued asset. And that's why LP positions or traditional LP positions paired with stablecoins are dollar protective. They're balanced. We'll see how that plays out with the UniV3 NFT vaults. I think there's still a great deal of value in those types of positions that are very much not talked about, predominantly only by me, really. Do you think Matic will still have a place or even grow after the London EIP? So that's a big deal. What I know is narratives change, And I know that right now there's an obvious narrative at play. And look at the capital inflow and the TVL just going vertical and pushing up against BSC soon enough, probably in a couple weeks. So that's a big deal. So what's meaningful is we'll see what happens. Um, allocate value based on today, allocate value based on where the narrative is, and if the narrative changes, you have to adjust accordingly. That's the way it works. Oh shit, Doc says, could you please post a link for Curve X Poly as I can't find it? Sure, it's Polygon. Oh, I literally just closed it. Polygon.curve.fi. Jeff says, hey Noah, finally made it to the live stream in the house. Welcome. Killers, you said for DeFi tutorials to try Crypto Dad and someone else. What's the someone else? Bankless HQ. It's pretty cool. Bankless HQ and DeFi Dad. Miss Hacker, smart. Thank you so much. It's my pleasure. Try my best and I won't stop. Gut instinct, prescriptions, Dr. No in the house. Gotta do things differently, boys and girls. It's time to be different. It's also time to click that damn likes button. 74 people in the stream, 32 likes. We can do better. Zatar in the house. Vog, do you still think Polygon Aave Curve is the best risk return on stablecoins? Daily yield seems to drop. Yeah, it's getting diluted because it's the best opportunity going right now. You're getting emissions denominated in Matic that it has the potential to go asymmetrically appreciate due to what's going on with the TVL, the liquidity, and the emergent monetary velocity. That's the way it works. Anyway, let's wrap up the stream. I unfortunately got other things to do today. I wish I could talk to you guys all day. So jump up into Discord. I got a whole community of people that are talking like me. And if they're not talking like me, I'll jump in and I'll set everyone straight to be different. Monday, 12:13 p.m., May 3rd. I thank everyone for joining. As always, tell everyone to subscribe. Check out the Twitter profile for the couple of links. Noah's office hours when I'm available. And obviously the link to Discord. And I will see you tomorrow on a Tuesday. Y'all have a wonderful day now. Peace.